Happy Halloween. This is what it feels like to be short into this market. What's up, everybody? Welcome aboard to Bubba's Daily Update. I am filming this update at 2:30 Eastern Time approximately. Markets are flying. It's a continuation from yesterday. As we talked about yesterday afternoon, we were going to see what the earnings look like, and I guess they look okay. I would look at these as a couple things to look at. The volume is light today, so that would be a concern if you're thinking that this is going to finish and continue to rally. It may continue to rally today, but I don't think it has much legs. It's the last day of the month, which could bring in some new money. We have been down. Basically, this is the worst month in about 10 years. So these are all reasons why we could have seen a rally today. Until we get some volume to confirm, I'm not ready to throw in the towel from the short side, although obviously I am wounded here from selling into the rally here. I think the big thing to watch for is how we act tomorrow. We're coming into Apple's earnings, so we've got the jobs number coming. There's a whole bunch of factors now that can come into play. I think when you look at the overall picture, we could have made a bottom. And again, I would never say no, which is why we always use some protection in case the markets start to go too far. But I think really what we're seeing here is a light volume, dead cat, short covering rally. As we say, the old rip your face off. It actually lasted an extra day, and that might have been with the weak action yesterday that pushed it higher. So we'll see. Again, we're never going to be too stubborn to say we're wrong and the bottoms are in. I still see a lot of stocks that have made new lows. I still see a lot of stocks in bear market territory. The tape, the breath is still ugly. So in spite of today's rally, I can't get overly excited. Now, we are coming into a bullish time of year. But again, I think we will have the Santa Claus rally, but I think we'll have it from 8 to 10% lower from here before we get that end of the year rally. We'll continue to watch right now. You need to be a little bit more cautious here, but certainly watch the VIX and look for opportunities. We are still going to sell into this rally, but with a little bit more caution, and we're going to tighten up our stops a little bit to make sure that we don't get run over because, of course, again, the markets are always right, and we can't tell you exactly where they go, but the footprint indicates that this is more of a blow-off pattern. Remember, in bear markets, the rallies look much better than they do in bull markets. They're much more force and they're much more powerful because you get so many people short trying to get out. So again, we're still on the short side of the market. We're still looking to sell into this rally, but we are now, as with the confidence we had the other couple of days ago, we are now a little bit more cautious because of this rally, but this should fail. And we should see a rise in the VIX, and we should see a rise in volume pushing this market back down. So we'll see how the rest of this plays out, and we'll see the rest of the story. In the meantime, gold got hammered today, but broke that 1220 support. Watch it around 1215. Again, if we break down, it can go back down to the 1180 level. Now, we're still tepidly bullish here, but again, we're a little bit concerned. You know, some of the levels are starting to give way. Brings cause for concern. The dollar broke out over the 97 level on its way to par. Interest rates rose as the treasury bonds and the 10-year notes got hammered again. So again, these are the things that we're looking at that lead to us to believe that there's more problems coming. You've got the grain markets where soybeans are not bad, but they gave up some earlier gains. They're a little weak. They're a little bit concerning. I think you got to watch corn to hold 360. Soybeans got to hold 850. And of course, wheat right now looks to be in trouble, but again, we'll look for one more big rally here and see how it plays out. We'll give it the double bottom to bounce off of. Meats were okay. They're a little bit mixed. Again, we still like the ag. We still think that money will flow from equities to ag when we start to see the sell-off. So we'll continue to watch there. The oil lower again, heading towards that 64 level. So that would make us happy. And of course, we'll continue to look to be sellers. Now we'll be a seller about 67 or 68. The cryptocurrencies look pretty good. They have held up remarkably well and are holding up well today, and except for Bitcoin, are higher. So at the end of the day, we're going to see what a lot more of these earnings bring. You've got Apple, you've got a couple other big ones coming out this week. We'll see how it plays out. But nothing has really changed, and certainly from a fundamental standpoint, this large rally, for this 2-day rally of about 800 points, has not changed the overall dynamics that the market looks like it wants to head lower. I would expect to be a very big sell-off, and if the jobs number is as good as the ADP jobs number was today, that will again green light the Fed to hike rates, which should send some chills on this Halloween through the markets. And of course, happy Halloween, everybody. Trick or treat. In the meantime, this is Bubba's Daily Update. Todd Bubba Horwitz. And of course, don't forget, if you'd like to help us with our high school program, that's at Patreon, patreon.com/Bubba Trading, patreon.com/Bubba Trading. Have a great trading day. We will see you back here tomorrow with more of Bubba's Daily Update. Take care, everybody. Have a great day.